Friday. You're watching Businessworld Live. I'm Danie Laurel. It's the start of the last trading day of the week. Let's go straight to our banner story. Bangko Sentral Governor Ben Diokno is painting a rosy picture for the Philippine economy as he expects the GDP to expand by at least 7% in the fourth quarter. Diokno says that if this projection is met, full year growth will exceed the government's revised target of 4 to 5%. GDP growth has averaged 4.9% in the three quarters to September. That's a turnaround from the pandemic induced contraction of 9.6% in 2020. Diokno forecasts growth to carry over the next 3 years, and with this, he says there is a need for the Monetary Board to patiently maintain its policy support to drive economic recovery. That board will conduct its last policy setting meeting for the year. That's next week, December 16th. Now, the country's factory output expanded for the seventh straight month, albeit at a slower pace in October. You can see that on your screens here. The PSA reported factory output as measured by the Volume of Production Index, or VOPI, that grew by 24.7% year on year in October. However, that is way slower than the 123% growth logged in September, but is still a turnaround from the 25.4% decline in October of 2020. Now, the Value of Production Index, or VAPI, also increased by 24.8%, while slower than the 122% growth posted in September. It's still a reversal from the almost 29% contraction in October of last year. Now, Trade Union Congress of the Philippines spokesperson Alan Tanhusay attributed the latest result to the higher demand ahead of the holiday season amid the looser restrictions. And now for the Philippine Institute for Development Studies, the month-on-month slowdown may be partly due to base effects, given some normalization of the numbers in October of last year. Now, we are still on economic data. You can see on my screen or terminal here the Philippine exports in the month of October rising by 2% year on year. However, economists had actually expected the exports to jump by 7.1%. So a little bit of a disappointment here, also lower than the September print, where exports rose up by 6.4% year on year. So again, 2% increase in the exports for October. Let's take a look at the import print. That's up by 25.1% year on year to the tune of $10.4 billion. However, that's still lower than what was estimated by analysts, which was 28.3%. However, it is slightly higher than the September import print, which was revised up to 24.9% year on year. And that brings our total trade deficit to $4 billion. That is slightly higher than the estimated trade deficit at $3.8 billion, and is basically just the same or flattish as what we saw in September. Now, let's take a look at our market open this Friday. We are sliding a touch. That's down by 0.4% after having seen quite a climb yesterday by 1.22%. We have, of course, all of those easing Omicron fears, lower COVID cases as well. However, net foreign selling still surged yesterday more than 1 billion pesos, and you can see a bit of a pullback from the investors this morning. Let's take a look at the big movers of the day. We're 5 minutes into trade. GD Capital up by 1.14%, followed by LTG and PLDT. But on the downside, you've got ASEN, Jollibee, and Globe Telecom. So not really, there's no real pattern here on which ones are being sold off. But, as mentioned already, we did climb yesterday, so a little bit of profit taking happening. Property sector is in focus today. Let's take a quick peek at those movers. The index is up by 0.12%. Vista Land and Ayala Land are leading that charge. And you have, other smaller players here. For instance, 8990, they're eyeing 165 billion pesos worth in home sales in the next 7 to 10 years. Currently, they have 671 hectares of land. They're also saying they expect to hit 20 billion in house sales by the end of the year. They did mention that 89% of those buying their units, now recall, this is actually, a low-cost housing player, I'm going to pull out the chart for you here, are basically 89% of them are primary home owners. And that was still jumping. They called the results for third and for first 9 months of the year outstanding, that there is a confidence increase in the first time home buyers and the end users. You can see house, which is the ticker, up by 1.1%. Finally, let's take a quick peek at Cebu Land Masters, which is also in the for this morning. This, as they've actually launched a 1.2 billion peso corporate tower that's called the Latitude Tower over in Cebu Business Park, Latitude Corporate Center. They did mention this from Jose Soberano, the third CEO, that the economy is now reopening. They see a future when it comes to office spaces, and they are very, very bullish on that. This will be 24 floors high, and dedicated a lot of spaces to that, to the BPO and executive offices. And while developers continue to bet, of course, on residential and commercial rebound, what about tourism? What about education linked property? Here to chat with us, we have Tomas P. Lorenzo. He's, of course, the president and CEO of Torre Lorenzo Development Corporation. Good morning, sir, and
Good,
welcome.
good morning, Danny. Good morning. Nice to see you again.
Nice to see you. Now, all around, we have a lot of optimism when it comes to the property space. There's new developments, despite, of course, all of these lockdowns, etc. Give us an update on Torre. Of course, you've traditionally been focused on education-linked developments. You've pivoted during pandemic. Give us an update, particularly, with the school closures, travel bans, etc. How you've been doing.
Well, thank you. It's been very exciting. Really a big change from last year. The last time I was on your show, we have been able to finish our two residential projects in Metro Manila. That's three Torre Lorenzo and Torre Lorenzo Malate. Three Torre Lorenzo. We are inaugurating that next week, and we already have residents moving in. It is right beside De La Salle College of St. Benilde in Vito Cruz. And also, Torre Lorenzo Malate is a block away from UP Manila PGH. So these two projects were built during the pandemic. Thank God that we had workers and materials, so we were able to finish them. So I think we're happy for that. And students are expected to start coming back to school in the next few months. However, we never really were empty because many students chose to stay in our buildings because of the high-speed internet. We actually have faster internet than their homes, so that's very important to the students. And now that they, even with a hybrid system, the students will want to stay near the universities.
Very interesting. But sir, these towers you have are always in prime locations, prime properties, right? And during the pandemic, we've seen, people leaving the central business districts, going to, provinces, going to other areas. Why are students still staying in these areas, and are people still going to be investing in these prime locations?
Yes, because our buildings actually very interesting that the residents come in as students and they stay on as working professionals.
Mm.
So we've seen that trend in the 20 years we've been doing university residences. Our buildings have actually converted themselves from just high-end student residences to young professional residences. So also, a lot of the students are from far-flung provinces and they're worried about their connectivity. So they want to be near the school and just waiting for schools to reopen. So we have that. I guess we're lucky that our residents like to stay in our buildings because we had all of the COVID protocols in place, and we really treated everything with safety and concern for the students.
Sir, which areas you've already mentioned? You have two new turnovers, if I'm not mistaken, last this past year. Which locations are you focusing on? Are you still, like you mentioned, in the top schools in Metro Manila, or are you looking at other locations in provinces na rin, and other areas outside?
Yes, yes, very good question. We actually have many projects outside of Metro Manila. our growth really trend was to go outside of Metro Manila. So we have residential condominium projects and hotels. For example, in Lipa, Batangas. We also have, I am here now in Davao City in the Dusit D2 Hotel and the Dusit Tani Residences. So it's a mixed use hotel and residential complex. We're also adding an office tower and another condominium to this complex. So in the last year,
Mm-hmm.
surprisingly, we've been okay. You're seeing photos now of the
Yeah.
Dusitani Resort, which is in Davao de Oro. It's a five-star resort. And, during the pandemic, we were always with guests because people had nowhere to go. In fact, we were getting all the guests who couldn't leave the country. So this local travel was amazing.
Yeah.
We also had a lot of weddings, destination weddings, because we finished our chapel and our wedding pavilion right before the pandemic. So we were the place to go in the Davao region. We were getting guests from as far as Cotabato, Zamboanga, Leyte. People were driving just to stay in our resort. So, and now with, of course, everything back to everything open, especially with Davao City, many people have really come here for staycation. I call it the revenge travel.
Oh.
It's amazing. So we
So
are
you manage
doing
to
very
keep
well.
that competitive even as people start to travel na abroad and to other places. I mean, how are you going to compete? You did mention you had a competitive advantage nga when there was
I think it's
shutdown.
safety. Yes, it's safety and security because for example, a resort is an island. We have our own island. You have your own villa. You have your own swimming pool. We have four restaurants on the island, so people can really be apart from anyone. They can see who they want to see, or if they want to be alone and apart from everyone else, they can. So it's all there. Even here, we have a city hotel in Davao City, the D2 hotel now. Because of all the protocols we've put in, people feel safe when they come. And Davao City was very good in its COVID protocols. So we're getting guests really from all over. It's all about being able to drive or fly to your destination hassle free. And right now, the hassle free option is really to travel local.
Sir, what about the dependence on foreign tourism, or are you really, really banking on the domestic travel? If, for instance, these travel bans stay in place, you don't have that much dependency on that.
That's a very good question, Danny. In the beginning, well, we really had a lot of foreign guests coming to our hotels. But of course, pandemic happened and everyone turned local. And what's so interesting is how the locals really they like to travel as well. So we actually got the locals who would have otherwise traveled abroad to just travel locally. Our occupancy is very high. We're in the 80s and 90s
Wow.
percent already,
Mm-mm.
and people really just want to get out. They
There
just
was
want to get
no
out.
period, sir. How long was the period of shutdown, if there was, in this entire
Well, we
year?
had shut down, for example, even in the resort, we had to shut down for about a month.
Okay.
But I used that time to clean and manage and maintain because that's really what we pride ourselves for. In fact, if you go to Instagram or Facebook, the number one comment is it's so clean,
Mm.
it's so nice.
Mm-mm.
So that's the idea. We really spend the time for maintenance. Of course, in the early pandemic, I'm talking 2020, we had to close also for maybe 2 or 3 months, but we spent all that time discontinuing the development.
Mhm.
So no time was wasted.
Okay, and nabawi naman with the revenge travel, which I think is still some way to go. Sir, it doesn't seem that you were affected, but can you say whether you're at pre-pandemic levels? Can you say that? Have you been beyond that, or if not, how long is that recovery gonna take?
We for our I guess occupancy, we are at pre-pandemic levels already. However, for our real estate sales, we have it's really much better now. Our growth I think second quarter we grew 35% compared to last year. We should, and then by the end of this year, we should be at least 15-20% higher than last year. So it has started to come back because, like I told you before, parents will always spend for the welfare of their children. Their children need a place to stay, a decent place to stay when they are students, when they are living apart from home. And then we also have really improved in terms of our sales for our regular condominiums, like in Batangas, or even for young professionals. I guess because we've been doing this for 20 more than 20 years, our buyers have actually been our residents, so they know the quality that we've been giving. When we do a project, it's really we put our heart and soul into it and really maintain. I guess the key difference in what we do is that we manage our projects. I always tell people, please visit all our projects. I am not embarrassed for people to see our projects, even our old projects, because we're still maintaining them. So the long-term appreciation and value is there.
Sir, final question. Now you are focused on tourism and education. What's the ratio of that, and will you be looking at other types of developments, retail establishments, commercial office spaces?
Yes, it's a good question. We are, of course, going into the office market, and we have our own. We have industrial parks, business parks. We have some, other developments, but it's really what the need is. I see the Filipino as wanting that really upgraded lifestyle, and they will spend for it. So, and they also, just like they spend for education. So we are, of course, getting into the office market in this complex I'm in now. We're putting an office building, and we're also putting more condominiums because when we put this up, all of the businessmen came to me, and even the consuls, the foreign consuls and ambassadors came to me saying, "Do you have an office in this complex? Because we want to stay here because it's perfect. You have a residence, a serviced apartment, and you also have hotel, and you have restaurants." So it's really the whole package that we're focusing on. And since we have the land bank, when we do a project, we own the properties around us, so we make sure that 10, 20 years, in the future, we're still managing the land around it and putting what is needed.
Okay, so stick to the needs. And like you mentioned, people are always going to go back to travel, always going to go back to school. We can't stay in this way forever. So those investments are very long term and, of course, worthwhile. Thank you so much for that update. That was Tomas P. Lorenzo, President and CEO of Torre Lorenzo Development Corporation.
Thank you, Danie.
Checking in on the other headlines, we're keeping our eyes on the Philippines dropped 9 spots in an annual global ranking of countries' ability to attract and retain skilled workforce. In the IMD World Talent Ranking 2021 report, the Philippines is ranked 57th out of 64 economies. That's down from the 48th spot last year. IMD World Competitiveness Center said the main factors affecting the country's performance in investment and development are effective implementation of apprenticeship programs, quality of education, and effectiveness of the healthcare system. UANP senior economist Sid De Rosa said that the country's ranking can be attributed to the relatively weak government investment and support for education. UP Professor Rene Ofreneo, meanwhile, said that the results are not surprising following the prolonged lockdowns due to the pandemic. Now, renewable energy projects accounted for 55% of the 93 proposals evaluation for grid integration as of November. The Energy Department said renewable projects accounted for about 16,000 megawatts in capacity. The agency has committed to a target of 50% RE capacity by 2040, as outlined in the 2040 Philippine Energy Plan. The only coal-fired power plant to pass the similar evaluation was Reliance Energy Development's 300 megawatt plant over in Negros. And that's the first look into the business day. Today is Friday, December 10, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.